What's going on, everyone? Today is September 20th, 2023, and it is your mid-market review. Wednesday is here. We had FOMC today, so hopefully if you traded prior, you traded safe. Hopefully if you traded after, you traded safe. If you're receiving this email, you're obviously receiving it from a different email than you're used to seeing. So we are going to be giving you guys access to the website. There'll be a link in the email, and you guys can go ahead and start looking into the website on Sunday's call. If you guys can make it, and obviously if you watch it recording, you can ask questions, let us know your feedback, and anything that you might have trouble with, just let us know. Even if you watch the recording, send us a message and we'll be looking at it. But as of the time you get this call, you'll have access to the website. We're releasing it to you guys 1 week really earlier than we release it to everyone else. Even though we've had beta testers inside of it, we felt that it would be right that you guys got at least access to it before everyone else too. So hope you enjoy it. Give us your feedback. We very much appreciate it. And now on to DXY. All right, so if you were on or listened to last week's call with regards to dollar, there was a couple things I was watching. Obviously, it was targeting this buy side liquidity. We weren't really obviously focused in on sell side. And the one thing that I was kind of watching was this weekly rejection block consequent encroachment, right? Seeing how we play, not only if we decided to go lower, but then obviously when we went higher and traded through it, how do we use it as support? I was also monitoring previous week's high, 2 daily BISIs, and then the 25 and then 50% of this wick. As you can see, we obviously dipped down into the wick on the consequent encroachment, right? This wick right here, that's something where I was watching as a potential discount array. And then obviously a potential run into the buy side liquidity, and we haven't obviously been there yet, but it looks like we are well on our way. If you go down into the daily, same thing on the daily, right? You can see that we had one initial tap into the consequent encroachment on BISI, right here on Monday, and then Tuesday dipped all the way through it, tapped the 25% of this wick on the weekly, traded all the way back through it, closed above the BISI and the previous week's high, right? In most cases, I would like to see this wick not be as long and really kind of at least just stay in here, right? Maybe fill that BISI one more time, maybe come and tap this because it's the same as the 25%, right? That consequent encroachment is almost the same as the 25% of the weekly, right? The consequent encroachment, consequent encroachment, mouthful, of this weekly or daily wick, excuse me. The mean threshold of this order block, right? I was telling you guys, if we trade back above and we close, which we did on Thursday, September 14th, watch to see this candle as be used as an order block, right? And note daily closure, right? And how important is daily closure, right? We closed all the way back above this candle as we should have, but the very next day, with it being what FOMC like it is, you're more prone to manipulation, or you're more suspect to manipulation, excuse me. So, even though ideally you would want to have a less of a retracement, we still could offer that, right? The week's not over, and it could be something next week where you could come revisit the consequent encroachment of the weekly rejection block, the previous week's high, and the BISI on the daily, and that might be what it is. But obviously today was FOMC. That's why you get that deeper spike into the mean threshold. But same thing applies, right? Where did we close, right? We closed even higher than we did the first 2 times initially tapping into it. So that's why my eyes are still obviously on buy side liquidity, and don't be scared or don't think that price can't come back and reclaim, like I said, any of these areas, right? Because it could potentially use it. But for the most part, still bullish on dollar. Nothing has changed. These areas were talked about to you guys on Sunday. Really, in the main kind of forefront of it all was watch and monitor daily candle closure, right? And going into a day like today where you have FOMC, now that this candle has been printed, the damage has been done. Now you start to watch to see if price wants to retrace back into the weekly rejection block, consequent encroachment. If it wants to just come fill right here, right? Because there's inefficient areas down here on lower time frames. There's no wick. Does it want to tap the previous week's high? Does it want to come into this BISI and revisit on the daily? Does it want to go into the week's 25%, right? And would be this consequent encroachment of this wick. I don't see that potentially happening. I think we stay heavy-handed and really, gun to my head, I see it only going as low as the previous week's high, but it obviously could go lower. But I do think we start to run for that buy-side liquidity. Also to note too, going into the end of the week, right? Use these candles as order blocks, right? From here to here, right? And monitor what that mean threshold looks like from wick to wick, but then monitor where it looks like from candle to candle, right? Monitor that on lower time frames, and then you can sit there and utilize that to help guide you if price decides to retrace back in there. Note what else is obviously there on the outside, and I think that's it for me, at least for now. So please let me know if you guys have any questions, comments. Well, I'd love to see your guys' charts going into this next week or so. Feel free to obviously get active in the community. We're going to be in there a lot, and super excited. But Henry, the rest is yours.
All right, so just hopping into ES here on the weekly chart. You can see from today's action, FOMC today, we're getting that distribution in the weekly candle now, working down into the sell side targets that we mentioned on the weekly call. I'll break it down into the daily chart, and we can see the ones that we talked about. But just looking at the weekly chart and how the candle is likely to continue developing for the end of the week and going into next week, just going to continue watching for sell side lower prices. Right, we're back into this monthly missing now. You can see right here, between this candle's high and this candle's low. We had previously come down to just shy of the consequent encroachment, and now working our way back down there again this week. So what I'll be watching out for is just we have a previous issue right here, which was trading just shy there, but here all the way down to the low and back out. So now treating this as that balanced price range. So look for these levels, 44.28, and then the consequent encroachment in that, and then below 44.14, and then looking for sell side under this low as well. Right there. That also in alignment with a little volume imbalance here as well, right? And this small inefficiency between these two candles. And down into the daily right now, what we talked about on Sunday's call was that as long as price remained in the lower half of this on the daily chart, we were expecting the price to trade below the sell side here and into this buy side balance, sell side efficiency right here, and also into this lower volume imbalance if we did get it extended. So you can see on Tuesday we ended up trading back down into there, and then closing back above this liquidity pool here. But then in today's action, remaining in that lower half and getting that distribution back down in the afternoon on the later end of FOMC. So we have between 2 and 2:30, a bit of a juice swing, and then 2:30 moving down into the close of the day, that distribution back down into the targets we're looking for, back down into Tuesday's low, sell side liquidity, and now reaching down toward these lows here. So as we look into the rest of the week, look out for these sell side targets, this Friday, August 25th low, and then this Friday, August 18th low, and then note the candle bodies as well as a rejection block, right? So potentially we may end up getting there overnight. We'll see what happens. But
hey Henry, real quick, will you I'm looking at something too, and this is just for the listener. Zoom in a little bit. When price trades outside of that BISI, right? So this when price starts to trade right there, like right here, what I like to do too is when I'm looking for price to trade with these BISIs, I'm also and civies. I'm also when we get to actually to close below it, I also start to note the 25%, right? I start to notice that, and I use that as the same thing. Right now what I do is I treat almost this whole thing as a BISI, and I break it in half too, and then I just watch for remaining price action to stay below it. You know what I mean? So that's a good useful tool for someone who's listening, who's trying to understand how to potentially play that price action delivering outside of it once it delivers outside of it. So only thing I wanted to mention there. But other than that, I am in total agreement. I am in total agreement. I totally think sell side is probably on the run right now.
Yep. Good to know too how after trading under this low here, price is remaining for the most part inside of the wick. As you can see, we have the high, low, higher high, and breaking down. So in here on the lower time frame, you can identify a bearish breaker on the 4-hour here, right? And then remaining in there until breaking down, also inside this 4-hour city there. So nice delivery into the targets that we talked about on the sell side there, and then just looking to continue lower. We did have a pretty nice expansion today, so it would be possible to see at least a potential AM session consolidation if this does continue to consolidate overnight. And otherwise, just looking out for your premium arrays to be responsive now. So if we do trade back up into this area, look and see how this volume imbalance can potentially be used as inversion, and then watching Tuesday's low as well for a potential immediate rebalance there. I think so you could potentially trade out back into this area, utilize it as inversion and a premium array, and trade back lower off of it. Keep those things in mind, and we'll see how the rest of the week pans out.
Alrighty, guys, that's about it from me. We'll be in touch. Let us know what you think. We are super, super excited to finally get this in your guys' hands, and we'll see what the future has. Other than that, Henry, got anything else?
That's pretty much it for me on analysis. Yeah, excited for you all to check out the website. I think you're going to like it a lot. We got a lot of cool features going on there, and we're excited to continue building out the community and giving you all the support that that you need to continue growing as traders. And yeah, it's all good stuff. Check out the website and come prepared with questions on Sunday if you have anything.
All right, guys. Well, if you haven't traded already and you plan on trading for the rest of the week, trade safe, and talk to you guys tomorrow. One last thing, actually. Unemployment claims at 8:30, existing home sales at 10. Keep that on your radar for the AM session tomorrow. Other than that, talk to you guys later. Peace.